Hey guys, welcome to After Hours Trading. My name is Chris,
And my name's Michael.
and we're here to make the market less convoluted and
Yeah, we're
more
gonna sift through.
digestible.
We're sifting through the noise and giving you the music. Oh, that's solid. Anyway, let's get started. You might be feeling the sting of the stock market recently, like this gentleman right here. Feeling a little disfigured, but we're here to help you out. We're here to make it easy. So let's get into it. First things first. Before we get into stocks, you got to know the state of the economy, and it all starts with inflation. Now, a simple way to explain inflation is capitalism. The basis is supply and demand. When there's a lot of demand for something, you raise the price of it because, people want it. So, when people are buying a lot of things and flooding the economy with money, it shows that there's a lot of demand for product and thus product goes up. So as you can see, this is only for 2021. 2022 inflation is actually at 6.9%, around that area. And how do we combat inflation? Well, you got to discourage spending. And how the government has figured out how to do that is with the Federal Reserve. Basically, they set the monetary policy. It's a fancy way of saying interest, and it basically it'll encourage or disencourage spending. As you can see right here, during coronavirus, everything was shut down. They were giving us stimulus checks. They wanted us to spend money and stimulate the economy. The interest rate is at a disgusting 0.07. There's no reason for you to keep your money in the bank because you're not going to be making any money. You might as well spend it. And that's how they encourage people to spend their money. Now that the economy is back up and running and we've spent all this money, the demand for products is way too high, the prices is way too high, and inflation is up. So now they need to discourage spending, and that's why you see the federal fund rate, their monetary policy or the interest is going up. Now, Chris, what do you think about the unemployment rate here?
Well, as you can see on the chart, as of now we have a unemployment rate of 3.5. I believe that's the lowest in about 40 years on average. And you can see the spike on 20 in 2020 when a lot of people lost their jobs in April of 2020 when the pandemic hit. Um, so every time this happens in tandem with high inflation, we get a thing called stagflation.
Pause. Just to clarify, stagflation is the same as a recession, just with high inflation rates. Start.
And I like to segue into Burry's tweets about inflation because he does point out something uh very insightful. And the tweet goes, inflation peaked, but it is not the last peak of this cycle. We are likely to see CPI lower, possibly negative in the second half of 2023, and the US is in a recession by any definition. Basically, we've had 2 quarters of negative GDP growth. That GDP growth, I believe, negative GDP growth, I believe, was for Q3 and Q4 of 2022.
Can
And
you gloss over what GDP is really quick?
uh, the gross domestic product.
And that's
Um,
the product we sell domestically. The products we make here, we sell here.
yeah, it could just be a variety of things, just like selling, buying, supply and demand, things happening in the economy.
Okay, so a high
And
GDP signals a good economy.
yeah, a GDP with growth, with consistent growth signals a economy showing strength. Faltering GDP growth or negative GDP signals weakening economy, and thus it could lead to a lot of things worsening. And as the tweet follows, the Fed will cut and government will stimulate. Basically, what he said in this sentence, he basically says in Michael Burry believes in the second half of 2023 or in 2024, um, we might the Fed might possibly cut too soon, and we might get uh inflation spike like we had in the 1980s,
And
where
by cutting too soon, you mean they lower the interest rate too soon, and people start flooding the economy again with money.
yeah.
Okay.
Um, which if you look at the federal funds rate in 1981, that's when Paul Volcker stepped in, and I believe it was Reagan appointed Paul Volcker to make sure the job was done, and we saw an interest rate as high as 19%, and which put inflation to heel. And if you look at the inflation rate chart, we've also peaked in 1980. So what Barry fears is we just have another spike, similar to the 1980 spike,
And then we
and
gotta raise interest to an absurd amount, just like Volcker did, huh?
yeah, exactly. Yeah.
You said something else about a Michael Burry tweet. You noticed he saw a pattern. I couldn't see it, but you saw this pattern yourself, actually.
Well, yeah. He's sort of cryptic with his tweets, but he tweeted out um just saying maybe with a chart,
Yeah, it's like
and
a picture of a certain pattern on a some sort of index. We think we found it out.
yeah. So he basically mentioned the dot-com bubble in 2000 through 2003. He circled the very where he thinks we're currently at, because he believes that, well, he thinks, at least I think he's thinking that we have the same pattern forming on the SPY, where we're basically triple topping, and mainstream the mainstream right now for stocks is we're in a new bull market. And that's not necessarily wrong, because the technicals do add up, and we see that we have crossed over the 200 MA, and um, usually this does indicate that we should get upside, but as the chart that Burry indicates says, um, this might be a false breakout, and it could lead to a bull trap. A bull trap which would possibly lead into next year or end in this year. Um, Only time will tell. But
Yeah,
I do like how he highlights a low in the circle, and we do have that low in October. We had that low, and from that October low in 2022, we've rebounded. We've we've touched around 410, and then we've immediately touched again, I'd say a month after, in December.
Yeah, I've got
Uh,
on my screen what we think is the actual tweet, because of course, all he said was maybe, and it's just a picture. He didn't put any of the name of the actual stock he was looking at. But were looking at it, and you said you thought it would be SPY, and we went back to the time frame that is on his tweet. It's September 2001, and we actually see this exact pattern that he pointed out, where uh, we peak up. This is the 200 day average. It's just the average of the stock in the last 200 days. And what that signals is when the candles are above the 200 average, we consider that to be a bull market. And we see here, touches once, touches twice, touches three times. and the market plummets. And even though it signals right here that we're in a bull market, it was a trap. And he pointed this out in this cryptic tweet, and we're just interpreting, of course. I mean, and I say we lightly because you're the fucking genius that can read Michael Burry's mind. And we notice here, if we go back, we're starting to see this exact same pattern form where we have a dip here. It
And
comes
if you
up
zoom out a bit, maybe we can get a clearer picture.
here. I'll go right here. So we can see we've got a dip right here. It comes up, it touches the 200 average, it goes over the 200 average, and then it goes over the 200 average a third time. And it's signaling a bull trend. It's indicating that we're actually going up, but Michael Burry points out that this is a pattern we've seen before where the market just completely reset.
So the question is, are we in a new bull market? I mean, it depends who you ask. A lot of YouTubers think we are. Some YouTubers think this is the start of a fall. That um usually when we have bubbles like we did in 2021, um ChatGPT showed us that when we asked it how much do bubbles retrace, usually they retrace around 80%. And right now from our top of 2021 to 2022, if you wanna show that, Michael,
Top of 2022.
measured to the October low,
Here
we've
we go.
only dropped.
Let's see here. I'll get my measuring stick. We've got the top of March 2022
No, no,
to
2021.
2021. My apologies. So
Yeah.
we've got this peak at 2021. We dropped to the low of October. That's about a 25% decrease.
So on average, we've dropped around 25%. And right now, if we were to go to the present day, I believe it'd be how much would it be for
Um,
present?
for present day, let's
Yeah,
see
from
here.
top to present.
Top to present, we are at a 16% decrease.
So we've retraced up 10%, which is pretty, I'd say, a pretty nice hefty gain in in a bear market. And I mean, we did have a really insane move uh from June to August, which was like I think 17%.
Right.
Um,
And just
you
to
were saying?
clarify, the market bubble is basically just a trend. That's why they called when the internet came out, it was the .com bubble, and retracement is basically like a market correction that you see in stocks. And with the .com bubble, uh, we had a retracement of about 70%. We lost 70% of that value uh, just disappeared, eradicated because when a trend comes out, people are excited, people are invested. Same thing with the housing market crash. We had the housing bubble. We called it the bubble, but it's a trend, and it retraced about 30, I think 30 to 40%. And this is a pattern that's shown that every time we enter a bubble, and it's hard to know when you're in one, we see uh, basically a decrease in value up to 50%, hell, 70% with the .com bubble. So if we're if we are potentially in a bubble now, we will be seeing a retracement. History has shown time and time again, the data shows that our value is going to decrease. Now, that's if we're in a bubble. It's hard to determine these things. These
Now,
lines I got to get rid of because I totally was fucking and moving them by accident.
yeah. Um, so what catalyst do we have going forward in this week? So if Michael, if you want to pull up that. So if the market's expecting a 0.25 increase, and this is the industry, and since they have mentioned before, um, coincidentally, that if we were to rally Jerome Powell and a lot of the Fed members uh, on the on the committee, they did say that if a rally were to occur, that it wouldn't help with the pain that's going to be caused because we could see a point 0.5 increase and this whole market could come on down real fast.
And point 0.5 is a lot when it comes to interest.
At least it's double what the market expects. So I mean, you can see why it would be something that would damage.
And it's important to
Um,
keep in mind that the entirety of stocks is based on public perception. If people
yeah.
think a company is going to do bad, it doesn't matter if the company actually does. People are going to sell, they lose faith. And so when we think that the interest rate is going to go up 0.25, if it did go up 0.5, that's going to see some extreme, probably a lot of selling, and we're going to see stocks plummet accordingly. Because at least
Yeah.
if it is what we if they're forecasting a 0.25 and it is a 0.25, at least people are expecting that, and they're not going to make any brash decisions.
And if you look at the CPI numbers from 2022, if you pull up
I'd have
investing.com,
to pull it up on it. Yeah, yeah.
and so we did peak out at on I believe June 13th at 9.1, and we have been steadily decreasing, um, which is good.
And it is
That
showing
is,
improvement in the economy. That is for sure.
but the Federal Reserve's goal is to have it at 2% on an annual basis. 2% just because they want you to spend your money, not save it necessarily. Because if you're getting a 2%, tax on not using the money that you don't spend, that incentivizes you to spend your money.
It's like a 2% interest is not a lot, so you would want to spend your money. But as you can see, the federal reserve is pretty shit at keeping it at 2%. But that is their goal. And so if that's their goal, then that's what we want to see.
So yeah, are we talk about anything else?
Yeah, I mean, I feel like now we can move on to some stocks that I got my eye on. Actually, my eye is
My
on.
dude.
So right now I'm looking at ExxonMobil. This one, I mean, anyone with a brain knows that oil isn't going anywhere. People need gas. Same with this second stock I'm going to show in a little bit. ExxonMobil has been thriving off of the Russian-Ukraine war because Russia accounted for 10% of all the world's oil. And even if we didn't necessarily purchase our oil from Russia, if 10% of the supply goes missing, well, demand is higher because now there's less of it. So price goes up accordingly. So I honestly think ExxonMobil, if you're looking for a long-term buy, that Russia-Ukraine war is not ending anytime soon. Vladimir Putin's a fucking determined ass guy. I think this is a great investment to make if you're looking for something a little bit more long-term to hold on to. Because even if the Russian-Ukraine war ends, I don't think we'll see a drastic drop in the stock of ExxonMobil, especially since they're planning on building a hydrogen plant, which is going to convert what's oil is now, is a limited resource. Now they're moving to renewable energy. So I like what they're doing. I like the idea. It's good business sense, and I think this is a good stock to look for. That being said, as well, you have Pacific Gas and Electric Co. Now they're a little bit all over the place, and they recently, if you don't know, were under controversy because they started their equipment was faulty and caused wildfires that fucking killed people and destroyed infrastructure, and that's why you can see here that their stock plummeted. Investors cannot, be confident in a company that has such negative media, but what we can see is they recently settled actually their this California fire. Oh my gosh, years ago it took them this freaking long. They settled, and that means honestly, there's only one way but up. And if we're looking at this company long term, this company is incredibly undervalued right now because they've been uh I mean, they've been doing well. People have been investing in them. It's just because of this wildfire and the bad publicity that people just couldn't, you know, if you think that other people are going to pull out, then you're going to pull out. And that's exactly what happened. But now that they've settled this lawsuit, I think this is another one to watch out for the long term. And finally, last of what I see, I've got this nifty trend line here. I thought it was real cute. Still kind of working on that. But China, actually, you know what, Chris? You want to talk about China?
Yeah, I mean, we recently had
You are a Chinese man, right?
I'm a Chinese motherfucker, dude.
Can't you hear his accent?
Yeah.
All right. Before we get canceled, what's your insight on China?
I mean, the thing with China is they recently just lifted the restrictions on COVID, and I mean, if you see since the start of 2020, they've been just going on a straight pathward to down city, and you can see that they've recently rebounded at this bottom right here.
And I've got
So
two lines of support as well, just to indicate uh, we've got some resistance here.
so though I think China is going to be a good long-term hold. As of now, the RSI still looks a bit overbought. I'd wait for at least a pullback. At least maybe like another 2%. And then if you want to make a long-term um, buy, you can invest in some Chinese companies like GoTo and Tuya and there's a lot of Chinese companies.
China's going to the moon, baby. Let me put on my ape goggles right here. Ooh, ooh,
Yeah,
to the
but
fucking moon, baby.
um, does that say we've crossed the 200 MA?
Yes, we have. We're actually China is in a bull market according to our indicators. We've got the 200-day average. We've surpassed the 200-day average, and our 20-day average has surpassed our 200-day average. So that's a good sign for a bull market. And
And the great thing is though, it appears that China didn't really catch our economic wins like the US did because I think as of now the interest rate is around 1%, and they came out of this COVID upheaval, fighting back. And um I think with these, lifted restrictions, I think we could really see a nice bull market on Chinese stocks.
God bless. So now that we've looked at our long-term positions, why don't we go ahead and check out our meme stocks? What's the good thing about meme stocks? What's meme stocks? You put it in a great way.
So the cool thing about meme stocks is we get perpetual squeezes, and if you are on the right side of momentum, you can really take advantage of these boom and busts of these meme stocks. As you see on this bottom right here, um, you can hover over the $4 bottom.
The $4 bottom right here.
Yeah, we've had an almost doubling. Um, as of now, my overall view on meme stocks, I'd say, is not to buy at least until we get more economic data. Like if February 1st holds a 0.25 rate decision, then I would consider buying. But right as of right now, I do not think this is a buy. Um, Although I wouldn't short this either because the apes are known to, come together and do it a
To the
short squeeze.
moon, baby. And keep in mind, people, you are looking at AMC stock plummeting, but since we're not taking a long-term position, we're looking at the short squeezes. We're really just trying to ride the waves you see here, where it drops to the bottom, you ride the wave up, and then you get out. And then the wave comes back down, and you ride it right back up. It doesn't really matter that the AMC stock is getting less and less valuable because you're just reaping the profits in between. And
Yeah,
that's the great thing about short squeezes. You just want to catch the wave, baby. We see
yeah,
this
it's
with
just
GameStop, Bed Bath Beyond, and Lucid.
yeah.
Uh,
Cool
oh,
thing about
sorry.
Lucid is Friday had some crazy volume. I mean, it went up like what 100% in one day, and
Yeah.
retraced 50% of its gains. But today we did have a negative day because of I believe it was because of indexes. Just because of this Wednesday we do have the federal rate decision, and I think that's just anticipation of maybe a higher interest rates. But I mean, these markets are irrational. We could see a crazy move into tomorrow and crazy volatility into Wednesday. There's no real way to say, but a lot of stocks are pointing into a I'd say a bull trap. Um,
I
a
mean,
lot of these stocks do seem overbought, and the data just shows us that we don't have anything to warrant this rally as of right now. And
that
yeah,
being said, I do think if I had some money to lose, I might throw a little bit into Lucid because the reason they had this rally is due to speculation that the Saudi Arabia Public Fund, their public trust fund, was going to buy out the rest of Lucid shares with the hopes of innovating this company. And as you can see that as soon as that news broke out, the stock shot up. Now, whether or not they actually are going to buy the shares is up to debate. But if they do, I could see some pretty good profits, and we might see another squeeze like this. So that could be a potential wave to ride if you've got some money to lose, and um, just something to think about. I think something to think about that I think about. Think about it. Do you want to
and
talk
like
about Tesla? Oh, sorry, I didn't mean to interrupt you.
um, no, I mean we can leave that for a separate video.
All
I
right.
think
I think so too.
um, I think it would make for a good video.
All right, so should
Um,
we conclude it up?
yeah, I mean as Warren Buffett famously said, be fearful when others are greedy, and be greedy when others are fearful. I think if that philosophy is, directed in these stocks at the right times, you can benefit greatly. I also wanted to showcase Bitcoin because Bitcoin's in an interesting level. Right now, it does seem like it's holding up. Um, Um, it's just skyrocketed like 40%. Um, a lot. I mean, today did show some volatility. It does have me a little bit worried that we might get the same. I believe if this is the bull trap that we're looking at and that Michael Burry thinks that we're in, I believe this could retrace to new lows. Where to, I don't know. We'd have to test the 16 to 15K area before we see possibly 13K to 10K. Um,
And
it
that would
seems
be sucky.
that seems a little bit wild to hear, but I mean, we've roared to like 40% in this rally, and we can go up as quickly as we can go down.
Yeah, I'm a big crypto guy. I love it. I started with it. It's just way easier for me to grasp than stocks. I don't know why. You'll notice I don't really use a lot of indicators because I look at it as a product, and the product is you're converting your money into something that's losing less value because your money is susceptible to inflation. Your money's susceptible to a lot of things. This is why people invest in gold, in what they call futures, because it'll last throughout the future and maintain its value. And I see the same thing with crypto. And you'll see I'm pulling up Ethereum Classic here because this is my favorite coin. Uh, it's literally the same as Ethereum, but you'll notice when Ethereum goes up 10%, Ethereum Classic goes up two, three times that because Ethereum Classic is way less, let's say, valuable. Because you see, Ethereum is $1,500 right now. Ethereum Classic's only $20, so you can buy more Ethereum Classic, which means that you have more basically shares that will each individually increase in value. Because if
Could
every
you
single
measure that for us, like to see how
Oh, I would
um
love to. Here, I'll let me show you right here. Is this is when I personally bought in because I
if we
noticed
were to invest? Yeah.
I've been looking at Ethereum Classic for a very long time. I found out about it 2 years ago, and 2 years ago it was at this exact same level, and I consider that if Ethereum Classic can shoot up to about 200, it was an absurd amount. Oh, it's not here, but it shot up to about
Can you
like
zoom out a bit? Because it
yeah,
looks
I
a
should
little
zoom out a little
confusing.
bit. So I'm getting really excited to talk about Ethereum Classic. But as you can see, it's considered to be quite valuable. And I noticed, and this is why I don't really use indicators for cryptocurrency, is because I look at it as a product, and this product was very cheap. And when a product's cheap, you should buy it because that's
So
the
from its
foundation of
lows,
arbitrage.
how how high was some of these peaks?
Well, if we're looking at the
Using like the measuring tool
here, if we want to look at the actual like super
from
peak,
December lows,
yeah,
I'd say.
from December lows, could have
Yeah, if you
sworn
live
Ethereum
like
Classic was at like 200 at one point. Maybe I'm tripping. Maybe it was at 150. But let's see here. So let's just start from right here, January this month. We're at the
yeah.
3rd of
Hmm.
January, shoots up to the 4th of January. It's a quick move. We'll look at it right here. It's a 25% move. Now, if you look at that same exact move on Ethereum, that was January 3rd to
Can
January
you zoom
4th.
out a
You'll
bit?
see here, January 3rd to January 4th, it's only a 5% move. So Ethereum Classic and
Wow.
Ethereum are moving at the same exact rate, but why would you not buy Ethereum Classic? You're getting 5 times the value for the same movement for the same, for less. You're getting more for less. That's why I love Ethereum Classic. I was literally blown away. It's like it's literally just better Ethereum. Um, that being said, I do think Ethereum is going to last longer in the long run. And if you can afford an entire Ethereum, that might be a better choice. But right now, if this drops down to if this goes first of all, if this goes back to $15, fucking throw your life saving. No, I'm kidding. This is not financial advice. You never want to invest money that you can't lose. But I think Ethereum Classic is one of these things that you want to watch for because the longer you're with it, the more familiar you are, and you'll notice when it's undervalued, when it's overvalued, and you'll reap the benefits tenfold compared to these people on Ethereum, compared to these people using Bitcoin, which I can't believe Bitcoin still exists because it's on proof of work, and we're not getting into that. yet.
A-
But just know
And
proof of work's not that good.
one more indicator I'd like to showcase is the Fear and Greed Index from CNN. Um,
Hallelujah.
right now, even with this drop, we are still greedy. We're not teetering to extreme greed, but I mean, like even a month ago we were at fear, and a month ago we were at lows. So I mean, the markets are cyclical. If you're able to capture momentum to the right side in terms of calls and puts, I'd say you can make a lot of money. Just make sure if you are gonna start, buying puts, make sure you do buy out. I'd say so March. I think March is gonna be the sweet spot in terms of intrinsic um, value of the contracts, and make sure you choose a reasonable strike price. Don't go out too far out the money. Um, I mean, I have said that bubbles do retrace 80%, but don't uh, don't go running away and thinking that you're gonna get that move in a single month or two. These things take time, and you know if if you have time on your side and you're able to analyze these markets, you can capitalize immensely. And yeah.
God bless. Chris, I love you. Let's get married sometime soon.
Fuck yeah,
Um,
dude.
Thank you guys for tuning in. Guys and gals, we don't discriminate here. Um,
Oh, and none of this is financial advice. I'm a retard just like you. Don't listen to me.
yeah, we're pretty
Um,
fucking stupid. No, we're not that stupid. I'm gonna be honest. We're pretty damn smart, but the stocks are irrational because you can't calculate humans. And it's just impossible. There are some forces at play. I do not doubt that there are some fucking mofos controlling the market a little bit, but at the end of the day, uh, the stocks are based on the money that everybody puts into it, and you can't predict what everyone's gonna do. So, I mean, we saw what happened to Dogecoin. Elon Musk was gonna go on SNL, and it just plummeted because you would think that him going on SNL would make people buy Dogecoin, but it just didn't, and it plummeted, and that's the risk you take with human beings. We're freaking weird. I don't get him.
I mean, yeah, things like Dogecoin, like all these cryptocurrencies. Make sure you do your research on them, and make sure you're always doing your due diligence. Don't be listening. Um, So my advice, if you don't trust it 100%, I'm just giving my opinion on these stocks, the state of the economy, and what potentially may happen in the future. I'm not a fortune teller. I don't have a crystal ball. I just see what happens in history, and history sometimes does repeat itself. And I mean, if you can capitalize on that, more power to you.
At the end of the day, there's a low barrier of entry to the stock market. They just make things super complicated, and that's why we're here. We're gonna make it digestible. So stick around, and hopefully we can get you confident enough so then you won't even need us.
Yeah, definitely. I always like self-sufficientness, and thanks for tuning in with us. And thanks for being here.
Hallelujah.
Bye.
Fuck yeah, dude.
All right, I'd rate that like a 6, dude. I'm so slow, dude. Fuck. Yeah. Yeah. Like I for editing, I'd say make a quality video, but don't obsess over it. No, just do it tomorrow, dude. Fuck. Do you want? No, you can't. You have work though, dude. Okay, alright. If you, dude, okay, okay.